Foreclosures soared last quarter as mortgage bailout programs ended. But don't let that 67% jump fool you. Things may not be as bad as they sound. Diana Olick is here to explain. Diana?
Kelly, that headline number is pretty big, of course, but let's put it into perspective. We normally see around 40,000 new foreclosure actions a month. But with the mortgage bailouts, we were seeing next to none, just 3,000 to 4,000. Forbearance programs, public and private, allowed borrowers to delay their monthly payments for up to 18 months. They are now ending for the first wave of troubled borrowers. So in Q3, mortgage lenders started the foreclosure process on just over 25,000 properties, a 32% increase from the second quarter and up 67% from a year ago, according to ATTOM. The highest levels in California, Texas, Florida, New York, and Illinois. Now, the numbers are still well below normal, but the rise does serve as a warning that foreclosures are headed back to pre-pandemic levels. There are still 1.4 million borrowers in forbearance plans. That's according to Black Knight. Now, I spoke with Dave Stevens, former FHA commissioner under Obama during the subprime foreclosure crisis. He said, I think the forbearance cliff will be minimal. Unlike the Great Recession, where home prices dropped approximately 20% from peak to trough, this recession saw home values rise by roughly the same amount. And of course, that means most of those who are unable to get current on their loans could sell and even possibly net a profit, Kelly.
Interesting. And what's the impact been on landlords, given how long this moratorium did last?
Well, for landlords, if they've been in trouble on their mortgage, they can get into these programs as well. But really, for them, it's getting that payment in from the renters so that they can pay the mortgage itself, and they can also pay some of the costs, the property upkeep, the taxes. So that's been rough for them. But as you know, that the eviction moratorium expired, so they're starting to see more income come in again.
Right. And again, just to differentiate the foreclosure moratorium on the one hand, the eviction moratorium on the other being more of a direct hit for landlords there. But even they say they've been, kind of trying to take things as they come. If they've made it through this point, the cash buffer has been a big help for a lot of people. What's been the impact, Diana, as we talked about, of all the people who have been buying homes investor-wise, taking them on the market? When we spoke the other day with Ivy Zelman's firm, one of their concerns is you could unleash a wave of supply back onto the market, right, if the market turns.
Yeah, and Kelly, I can't tell you how much pushback I've gotten from other analysts on that, saying there's no way that we're overbuilt and we're going to have too much supply given how much demand we have right now. For those landlords, for the investors in the market right now, they're still seeing high demand from renters. They're still seeing increased prices. So for them, they have no reason right now to sell. If you were to start to see more foreclosures, that is, more inventory come on the market, I think you would just see it snatched up by those investors anyway. So it's really not going to hurt the overall housing market.
Yeah, maybe now would be sort of a better time for that to be absorbed. All right, Diana, thank you very much. Diana Olick.